how out of the norm are these targeted strikes from what you would normally see during a labor negotiation? Also, strikes at all three of the big three.
Yeah, no, it's very interesting. I think to be fair, we've been prepared by Sean Fein about the risk of a wide strike, and I say the first impression is that they're striking widely, but they're also striking softly. As Phil said, no, they're looking at final assembly, so they're not trying to shut down the whole value chain, and they haven't really targeted the biggest earners. You know, they're looking at mid-sized trucks at GM. Jeep, Stellantis has a lot of Wrangler inventory, and Ford also they're looking at Wrangler and Ranger and Bronco. So if they had really wanted to hit hard, they would have chosen maybe different plans, different products. So wide start, soft start.
All right, so you're saying they're not hitting that hard. Still, we're seeing Ford and GM down about 2% in the pre-market. Stellantis actually up fractionally. That's pretty interesting. So you're saying they're striking widely and softly. What's the long-term impact in your mind on the stocks if this continues? We've seen the estimates that if this strike takes 10 days, it'll have a $5 billion negative impact on the U.S. economy. What about these stocks over that period of time?
No, it's surprising to see Stellantis go up. At the same time, I think it's been seen as the most at risk, and in fact, they've been treated like the others. So maybe expectations a bit worse at Stellantis. I mean, we look at it. It's what this tells me is that because it's a relatively soft start, maybe the parties are not that far apart, and they hope to get a deal fairly quickly. So that might argue for a shorter strike than if they were really, really far apart and really hitting hard. The way we look at it, though, is more of the impact per week. And on our calculations, basically, a week shutdown of Stellantis is 1.5–2% of the annual EBIT expectations. Ford is probably a bit higher, 4 to 5%, and GM 3 to 4. We make those estimates based on the fixed costs and what the cost of a shutdown would be if something like 70% of the production was curtailed. But this is not what we're looking at right now.
All right, so maybe that's why we're seeing Stellantis actually higher. It's likely to be the least impacted by a strike, at least in the near term.
It's got more inventory.
Got more inventory. Okay, that's another issue there as well. So one of the big things here is compensation. We just put up the numbers, the negotiations there. Another big thing is the future of EVs, and these workers want to have some input into that. When we talk about the stocks, this strike, this labor negotiation, what impact does it have on the future of EVs for each of these companies, which I think is a big part of their thesis when it comes to investing in them?
Yeah, no, absolutely. And I think the UAW wants some commitments that EVs are going to be built in North America, in the US preferably, and also that the pay structure isn't going to reflect the view of the OEMs, which is that EVs are simpler, therefore compensation might be lower. I think that's a discussion that UAW doesn't want to have. And so we'll see. What hasn't been discussed that much is maybe more product commitments that the UAW wants to have from the OEMs. And I think, in particular at Stellantis, the Belvidere shutdown. Would Stellantis agree to reopen Belvidere, commit to an EV production there? Those are discussions that have been kind of below the radar. A lot of discussion about pay, but they're probably very important for the UAW.
All right, we're just showing your ratings on each of the stocks. Stellantis a buy, the other two holds. At what point, if this continues to drag on, does it change your price target and your rating for these stocks?
Well, it all depends. I think the first step we'll have to see is whether UAW pulls back on Ford, because striking Ford today kind of undermines the negotiation that Unifor in Canada is having with Ford. So that's first consideration to see whether there's a shorter period of strike at Ford to let the Canadian unions agree on a deal. We'll have to see, really how OEMs go back to the table. But right now, again, it looks like a soft start. I would say Stellantis has the benefit of having a higher profitability and having a more diversified earnings base. 80+% of the earnings of Ford and GM are in North America.
Right.
It's down to 60% of Stellantis, which is slight positive for them.